Welcome, conscious capitalists, to day 19 of our expanded virtual conference. We are so pleased to have so many of you joining us from around the world. We have a very special guest speaker for you today that's been a longtime community member of conscious capitalism, and I think is going to give some amazing insights into what he's seeing in the world today. So you'll be hearing from Daryl Brewster. And the worthy practical problem that he is working to solve through his work with CECP is how to encourage and empower the world's leading companies to act as forces for good in society. And that focus is really on innovative community support and sustainable long-term business strategies. So he really sees those as being vital as society is responding, recovering, and reinventing in the wake of COVID-19. So to further introduce Daryl and kick us off today, I'd like to introduce Alexander McCobin, our CEO.
Thank you, Amanda. And I want to thank not only you, Daryl, for joining us, but all of the other organizations that are a part of the Imperative 21 coalition that we're forming together right now. For anyone who is not yet aware, CECP, Conscious Capitalism, as well as Just Capital, the B Team, B Lab, the Coalition for Inclusive Capitalism have been coming together for the past year because we recognize that we're allies in the same space. We're all using business as a force for good in the world and trying to make the world better through business, and are looking to make sure we're not duplicating efforts or conflicting with one another, but actually amplifying one another's work, getting to a 1 + 1 = 11 relationship. And Daryl, it's just been such a pleasure to get to know you along with everyone else over the past year. For anyone who doesn't know your background, let me give a little bit about it. Daryl has been president or CEO of divisions or companies that are really impressive, like Kraft, Planters, Krispy Kreme, even Campbell's UK operations. And in your role at CECP now, you're bringing together other CEOs of sizable companies around the world to share what they're doing to fulfill their higher purpose. And even that name, Chief Executives for Corporate Purpose, is something that you've been very intentional about and adopted just a couple of years ago, changing from the original name given by your founder, Paul Newman, back in 1999, recognizing the direction that business is going in. And the only other thing I'll say before I turn it over to you, Daryl, is that it's just amazing to me. You always look this good, whether it's a day-long retreat after you're coming off a red eye from Europe or jumping on this Zoom call. I'm just so impressed by your demeanor, your poise, and just how intelligent and bright you are. So thank you so much for taking time out of your busy schedule to join the Conscious Capitalism community and share some of your thoughts.
Great. Well, thank you, Alexander. It's really an honor to be here with other fellow conscious capitalists, and also have gotten to know you and the team at Conscious Capital, Amanda and others here over the last months as part of the Imperative 21 initiative. So I'm excited to be here. These are obviously challenging times for us all, and hope I can share some insights, some thoughts, what we're learning from many other companies as we all go through this current crisis. It is really a challenge. I think it's really a test of leadership and a test of purpose-driven, conscious leadership here as we move forward. So I'm delighted to be here. I will note that my hair has been getting a bit long over the last, not as tightly cropped as yours, since we've been in shelter here in our place in North Carolina for the last number of weeks, and I don't really trust any of my wife or anybody else with the scissors. But I'm hoping now, with the state of Georgia being opening up, I'm hoping to travel down there tomorrow and get a haircut. So we'll look forward to that. But thank you. I'm glad to be here. And we do want to kind of get a sense from the group here. We have a few polling questions that we'll be asking to get a perspective from those that are there. And in addition to Alexander, I'm just delighted to speak with you all, and honored that you've taken time out of your calendar to spend it with me. Michael. Good. We're going to kind of start off here with a few questions. And our agenda here will be talking a bit about where you are. We'll talk some about CECP. We'll talk about why and the importance of purpose, particularly today. Talk about what some leading companies are doing, but look to spend a good chunk of our time for question and answer. We're going to have 2 questions out of the gate. We'd ask you to fill those out. But how have you and your business been affected by the pandemic? Significantly, number 1, somewhat, or not at all. So if you can push the button according to your answer. We're going to have one other coming up after this. We'll take a look to kind of sense where people are right now. So please push the button according to your answer. And looks like we're getting ready for the response. After this, we'll have another question that will be coming up. All right. And we have some results. Not quite seeing those results up yet. All right.
It's looking like so far, Daryl, we've got 57% of our audience is saying significant disruption and impact. 40% is saying somewhat, and 3% is saying not at all.
Okay. So kind of numbers we're seeing from many of the companies we've talked to, a lot of people being significantly impacted by that. Some a bit, depending upon where you are in the world or what business you're in. And a handful haven't been affected at all, which is great. I'd like to know where you are so we can join you. We have another question, which is, as it relates to your business, where do you see yourself along a cycle, which we'll be putting up here shortly, on whether you see yourself in kind of struggling or survival mode. We'll get that next question up. Okay. Struggling or survival mode, whether you're kind of stable, you're certainly facing some new challenges, or whether you're really sustained or accelerated growth. And that's going to kind of kick us off. I do want to get a sense of where the audience is here as we move on through the comments. So great to see those votes coming in. For those in Chicago, vote early and often. Give everybody a chance to see how you're looking, and that will help me focus my comments accordingly. So I'm seeing a good chunk are in the middle range. Also, 25 to 30% are in the struggling mode, and then we have a number who are in the just a few who are in the sustained or accelerated growth area. It's very helpful, and we'll again get to the slides. Okay, Amanda, do you have the official results?
Yes, it looks like we have a handful of people that have not responded yet, but we're at like 90% voted. 24% are saying they're in the survival struggling mode. 65% say they are stable but facing new challenges, and 10% are saying they're facing sustained or accelerated growth.
Great. Well, thank you. We kind of talk about this as the difference between being in the travel business, which is in survival mode right now, and the toilet tissue making business, which is in accelerated growth roles. But it's important. Everybody got dealt a new set of cards right now, and reflecting that, I'll try to reflect those in my comments. At this point, Michael, if we can go to the slides, that would be great. And we'll take the group through our agenda and where we're looking at. So we'll go on to the next slide, which will be a pretty picture of me. And we'll also get a chance to see some of the organizations that I've had an opportunity to lead and run over my history. And I'll refer to a few of those as we go through, but most of my time will be spent talking about CECP, but gives you just a bit of background in my experience in the consumer space. And then we'll put up the agenda for today's program. And really the first here was where you are, the kind of the tough times that we're going through. We'll talk a bit about what we do at CECP and the importance of purpose. How do we lead in this world, and some thoughts and ideas that we're seeing as we talk with CEOs around the globe. And then we'll open it up for some questions and answers. Let's get on to the next slide, which really is what you just responded to, which is, where are you on that cycle? And it looks like about a quarter of the people are in survival mode, kind of where the airlines are right now. I talked to a CEO yesterday who had record January and February in the travel industry. And over the last 4 weeks, this is an $800 million business. So they're doing $70 million in an average month. They've done no revenue. A great conscious leader, a great, unbelievable impact. And you got to recognize, if you're in that shape, you're in a very different story than perhaps some who are in a stable position. That looks like the bulk of you all are in pretty stable spot. I put Campbell Soup, a company that I had worked with, as an example of that. They benefited some on their retail side in soups. On the other hand, their food service business has essentially disappeared as people have moved away from restaurants. So they're facing that combination of challenges. And then there's a few companies out there, and it's nice to see 10% of you are in that zone where you're seeing have been and have maybe even accelerated your growth over the last few weeks. Zoom being a good example as we have our latest Zoom call, my fourth of the day today. I have had the honor / privilege / challenge of running businesses in each of these different phases. Survival mode when I took over as the turnaround CEO of Krispy Kreme Donuts, and a business that was facing billions of dollars of lawsuits. We were being sued by our employees through ERISA, our franchisees in the Department of Justice. We were losing money. We were really struggling. We had to restate 5 years out of financials. As some people said, why did you take the job? But I took it as a turnaround challenge. The board made it really kind of worth my effort. And what I learned in that piece is, number one, if you're in survival mode, cash matters. You've got to get that stuff there. Part of our strategy was to really get that cash so we can move from survival to stability to sustained growth. But also it was really important to plant the seeds, the purpose of the organization, so that you weren't just mired and mucked in survival for forever, but you actually could have those right seeds that can help you to grow for the future. You just had a limited number of seeds that you could really plant. I was just talking with a CEO earlier today of a business that's a relatively, not a CCP company, a relatively small business, 5 to 10 million of revenue, struggling, had a big launch plans this year, and things changed. And buyer appointments at major retailers canceled. Most aren't doing video right now in the midst of the launch. And we talked a lot about what he's got to do as a CEO in that kind of a situation. And my counsel was really two. First, preserve cash. You got to do that. But second, don't forget the purpose of the organization, what you're trying to achieve. But you have to be very selective in what you're going to do. You're not going to be able to invest in all of the growth areas, all of the people you wanted to bring on. He had a number of sales pieces. So you got to be tough right now so that when the time is right, you can really grow and expand your enterprise. At Krispy Kreme, where we faced all those issues, we needed to get through our financials, restate our business. We were not allowed to franchise under US law in the US until we had our financials up to date. And it was really a struggle. We had huge legal fees and others because of prior mismanagement, which we were cleaning up. But we did is we said, we're gonna have to find one area to be able to grow. And our purpose at Krispy Kreme, for those who've enjoyed a warm donut off the line, was about warm smiles. It's really what we're about. Treats that people could really feel good about having, have a delicious donut time to time, and really that can turn the biggest frown into a great smile. And we certainly had a lot of investors, creditors, employees, and others who were frowning. But our consumers still loved us. But we were limited in what we could do in the States. And I actually had one guy named Jeff Welsh, and we set him on an assignment to take Krispy Kreme around the globe. Strategically, that was something we wanted to do. We believed we could bring those warm smiles around the world of Krispy Kreme fresh off the line. At the same time, we knew we had to plant some seeds to be able to grow. And as we opened up new markets, you do receive in the franchise world a little bit of upfront payment. Jeff did an amazing job. And we got him out of headquarters. He was driving people nuts. Got him out there, and he opened up Asia, Middle East, Europe, Mexico. And during that time, we were struggling to do all those things of restating financials, raising capital. We were a publicly traded company. We never missed a day of trading. While we did all that, and we were getting our basic businesses stabilized in the US, Jeff went out and opened up a bunch of markets. When he started, we were at 5% of Krispy Kreme stores were outside the US. By the time I left, that was over 40%. Today, it's 75, 80% of Krispy Kreme stores. So even though we were managing through survival mode, we were very selectively planting seeds for future growth, all related to our purpose of really bringing warm smiles around the world. We actually accelerated it during that survival period. For those who are in a stable situation but facing challenges, that's consistent with most of my experience in life and businesses that I've had an opportunity to run and to lead. And it's a different set of challenges because you're doing all right, but how could you do even better? When I ran Nabisco, we set a very clear-cut purpose. We were in a very competitive market. Nabisco with Oreos and Chips Ahoy and Wheat Thins and Triscuit against those evil elves from Keebler. Those were our big competitor in the US. We were number one, they were number two, but they had been gaining share. And in that case, we had a much more very focused, more of a left brain, if you will, kind of a purpose, which was to understand, because we hadn't done a good job of that, understand and to meet the needs of our key stakeholders, our consumers, people eating our products, our customers, the retailers who are providing those products, and our communities, which were supporting our bakeries and others, to meet those needs faster, better, and more efficiently than competition. And it was a really clear cut in a group that had been losing share, had been profits had been declining, was a real sharp edge that we wanted to give our audience, our group, as our purpose as an entity. And what was terrific is the group responded to that in a very powerful way. One of the ways we were really excited to see that, and I was in, and we were looking for ways to get more competitive, is one of our indirect competitors was Frito-Lay. And there's a guy named Bob Beebe, was the former CEO at Frito-Lay. This is back in the 2000s, seems so long ago, before COVID, BC. And I was on a panel with him, and he just talked about waste. How much waste do you have at Nabisco now? Frankly, it wasn't even a number we were tracking. He said, what are you throwing away on the bakeries? What are you throwing away at products you sell in that don't sell and you got to pick them up? And I went back to our team and said, how are we doing on that? And no one knew. They hadn't really been tracking waste. We've been struggling around. We had gotten sloppy in some of our behaviors. And I said, well, let's see if we can really get together to understand how much waste we have and whether there's an opportunity. Bob had given me some numbers that indicated that we might have some possibilities. And we started as an initiative. Was it consistent with our overall purpose? We called it Project Waste, WASTE, the acronym, and it stood for the War Against Stupid Things Everywhere. And it was a way for us to look at efficiency throughout our system, consistent with meeting the needs of our customers, our consumers, and our communities. And what we learned on waste is about 3% of the product we were selling, we were picking up because it went out of its code date. We were selling too much to certain customers. And that product, once we got it back, you couldn't do anything with it. Once it was out of code, you had to throw it into landfills. It was adding to environmental waste. It was costing us money. It was a pain because it was moving. We were shipping those trucks filled with products that we weren't actually going to sell. And we put that whole theme around Project Waste to see if we could really drive the group under the theme here of what we could do for our communities. It wasn't about necessarily making money. We did that as a result, but how could we just eliminate that from the system? How do we eliminate waste in our bakeries? And if you think about Nabisco, we're about $6 billion of revenue. We took the 3% waste number down to about under 1. That 2 percentage points served over $100 million that we were able to invest in innovation, new products, and the like. But an example of that purpose for an organization that was stable. And that funding we could spend back into the business allowed us to return to growth and drive tremendous growth across products like Oreo and others over the last few years. When it comes to sustained and accelerated growth, we show Zoom. One of the boards I'm on right now is a company called Freshpet. It's the leader, #1 in refrigerated pet food. And if there's ever a time when you need your pets, going through the current situation is one of those. In our sense, we have a business that's publicly traded, so I can't get into a lot of detail, growing fast. And our challenge today is how do we ensure we have a safe workplace with COVID around in a meat plant? And those who've read, we've had a lot of meat plants in the Midwest and other parts of the country have to be shut down. The Smithfield plant in the Dakotas is one of those examples. And so our team and our very strong leadership team really took advantage of this. We went out, we went to talk to other places to really find out how we could make sure we had an absolutely safe workforce. It's impossible to guarantee it, as we know these days. But we went out and did things like found a retired nurse who could take people's temperatures. That was something nobody did in the food industry. They did it in other industries. We checked through legal, we got that done. We also set it up so that our employees, many of whom were English as second language in the area, were having trouble. The restaurants that they used to go to were struggling to get by. So we actually worked out an arrangement, our management team, with those restaurants to provide products, either coupons or actual product, so people didn't have to make another stop on the way home. So it was a great community-wide solution, but to really ensure we protected the safety of our employees. Now, that's a job we need to do every day and one that's really important to our group. But again, consistent with our purpose there of planets, people, and pets. So it's about planet, which we've done in that area, but also about the people and their pets, and especially our people on the workforce, a key stakeholder. So a few of those things about dealing in those tough times, and I'll now kind of share some of the things we're learning and doing as it relates to CECP. Onward. Next slide, Michael. CCP stands, as Alexander mentioned, for Chief Executives for Corporate Purpose, as we look to drive sustainable business. And our belief is you do that through positive social impact. Right? That's what we're really all about. On to the next. And we were founded, these are our founders, back in the day when it was all just old white men who ran businesses. Still is, probably to too much of a degree. The far left is John Whitehead, who had been the former CEO and chairman of Goldman Sachs. To the right is Peter Malkin, who still is on our board. Publicly traded company Empire State Realty. They own the Empire State Building. And the middle is Paul Newman, the actor / salad dressing maker. And if you talk about a purpose-driven leader, when he set up his food company, he set that up such that 100% of all the income that's been generated out of Newman's own products is invested back into communities and to society. Over the years since they've launched, it's been 15 plus years now, they have generated over $500 million that have been invested back into society from the profits of that. They have also had over 1 million kids have gone through their various serious fund camps, all designed talk about a purpose-driven organization with a leadership team and motivation throughout the group. So those founders were very involved in CECP, and their belief, as Alexander mentioned, was that the world's leading companies can and should be a force for good in society. And by the way, so can a lot of other companies as well. Next slide. Since that time, CECP has grown to all of these companies, well over 220. Actually, McKinsey joined yesterday, which is a good sign. And those companies represent about $7 trillion of annual revenue, north of 10 trillion of market cap, although down a little bit. Let's go back a couple there, Michael. Get ahead of me. We'll stop there. But all those come back to the logo slide.
One second.
Okay.
Give me 1 second, Daryl. Apologies.
No problem. So those are the companies that we work with, across the U.S. We also have local country partners as part of our global exchange in 18 countries around the globe, representing half the world's population, 2/3 of GDP. And these are organizations like-minded with CECP that are working within their own countries. We're just talking with our friends in Italy, our partner. They have an annual event, which is terrific there. And of course, they're looking to open up after a very difficult time over the last few months here in May, and very excited about the program we'll have there in June. The only downside is it's an event every year in Tuscany. I can't wait to go. This year, we're going to do it virtually. I guess it beats Hoboken for the Conscious Capital event this year, but we won't be able to do that one. But it'll be great to have those Italian CEOs together, and we'll be able to bring guests from around the world to speak and to share some of the insights, inspire them as they come out of the downturn. So that's the power of the CCP network. Next slide, Michael. And these are the verticals that CECP works with. We work in community investment. It's an area to really help companies think about how they're working with communities. We provide communications expertise. How do you tell the story of big companies? Inevitably, we find companies are in two camps. Those who are doing a lot of really good stuff don't really tell their story or don't tell it well. And those who aren't doing a lot of good things want to tell all these things. We've tried to get that balance right and to make sure companies are being authentic, they're being transparent, and as they talk about the good stuff they're doing, make sure they're doing it, not just talking about it. And the other area, which I'll spend a bit more time on, is about CEO investor engagement. And how do we really help CEOs today communicate relative to investors? Not the traders who are in and out of stocks on a daily basis, but people who are investing in business for the long haul. Buy side, pension funds, sovereign wealth funds, index funds, and the rest, and we'll talk more about that. But those are the three verticals that the CECP organization operates on. Next slide. Key to our efforts is really the notion of purpose. That's in our name. We kept the same initials from our start, CECP, but we then changed our last name to Corporate Purpose. And you can see here some work from a guy who's had a huge role at Raj Sisodia at Conscious Capital. And this was one of the key pieces of research that really convinced me to join CECP back in the day, 7 years ago. And we've seen a lot more research that reinforces this point. But it talks about, as we move from a sense of community and corporate philanthropy to CSR to purpose as an organization, a lot of it was around this research, that purpose-driven companies Not only were they doing good things for the world, but over time, they outperformed in the market. They were driving values, and for investors and their stakeholders, they were driving value. What was interesting as we went through these, Raj's work was really based on those companies that were purpose-driven, the ones that did the best jobs with their customers, the best jobs with their employees, the best jobs with their communities, the best job with the planets. Interestingly, those four letters spell CECP. I rearranged them, but basically you kind of get the idea. That stakeholder focus really made a big impact. And not only have these companies outperformed the S&P 500, but even the good to great companies that have been talked about. So it's been a very powerful piece in the market. And for our big publicly traded companies, having that research really helps them see. Whereas Larry Fink, CEO of BlackRock, the biggest investor the world's ever known, is the purpose is not a mere marketing tagline. It's the fundamental reason for being. So the very important piece, and again, an example of how conscious capitalism and CECP are inherently tied together, not only with Imperative 21 today, but even as we have developed our plans and programs as organizations. On to the next chart. One of the things that we thought was really important in purpose is, how do you define it? The word can be bandied about. I hear people talk about purpose washing and others. So we set out that we wanted not only have the numbers, but also define it. And to us, the purpose of an organization is the why. Why do you show up? Is it because you want to bring warm smiles like at Krispy Kreme? Is it a more focused area like we had at Nabisco to understand and meet the needs of our customers, our consumers, and our communities faster, better, and more efficiently than the other guy? Or is it somebody like Freshpet, which is about pets, people, and the planet? These are what really gets us up and going. The results of that is the byproduct, but it's really the why and the essence. But we think you need to define it. And we've really seen four buckets that help us to do that. One is the stakeholders. And you saw that from Raj's page. You know, those four areas of CECP, each company may have some different stakeholders, but that consumer, the employees, suppliers, communities, investors, they're really critical to that area. So stakeholder capitalism, as we believe, is here to stay, and we believe will be accelerated going forward. Second, and particularly for our publicly traded companies, who often live quarter to quarter, month to month, is taking a longer term time horizon. This doesn't mean you don't have to perform in the short term, but it's within the context of where you want to head and where you want to go. Again, to the Krispy Kreme story I mentioned earlier, if it was just about the short term, you'd survive and just keep treading water. And eventually, you know what happens if you tread water. But if you begin to have that North Star, that purpose of where you want to head, and ours, warm smiles around the globe, it helped us invest a little bit and a great return out of our international experience, or similarly in the others. Third, great to talk about it, talk who your stakeholders are, great to have that long-term time horizon. It must be embedded and integrated in the organization. And that's what I learned a lot with, we mentioned at Nabisco, with our Project Waste. Every Monday morning we had a meeting to talk about waste. We got sales guys, we found out guys were getting paid when they'd sell product in, but we never subtracted if product got returned. And they were loading up certain customers that didn't need the product. So that really kind of helped. We needed to integrate that, to measure it, to make sure that was happening, to have the incentive system that aligned as well. And the last area, while we talk about all those as good areas, is we also have to recognize and understand the material risks of operating. You know, we're doing things as a business. We also ought to understand if we're having a negative impact, how we can reduce that. Krispy Kreme is an example. You know, we sell sugar and flour, but we also sold a lot of products. Our products when I arrived all had trans fatty acids, and we learned that was not a good thing. Our product's a treat. We're proud of what we sold at Krispy Kreme, just as I was of Oreos and all the rest. But in both of those, we made enormous investments to make sure we reduced the risk, which was pretty clear, was becoming clear, over having products that could be better for people, or at least not quite as bad. And that's something, particularly in the COVID world and others we're seeing with companies, is understanding what those material risks are to your enterprise. How do you minimize, how do you avoid them? We have seen a number of companies that were ready for the pandemic. A number of utility companies, they listened to Bill Gates when he spoke at TED Talks a few years ago, but most were not. But those we think are all critical to really purpose matters. Next chart. We think this is becoming even more important. This is a slide we used before COVID, and it just talks about everybody talking and the interest of investors and magazines and media in this next normal of a more sustainable business. For those who aren't familiar with the term ESG, stands for environmental, social, and governance, but it is all part of sustainable business. Next slide. And we believe this becomes even more important today with the phase of the pandemic. Many of our companies today are in a response mode. And if that's what they are and they're in survival and struggling, that's where we need to meet them. What are they doing to stay safe, to make sure they can keep and survive as an enterprise? We're starting to see a little bit of companies get back to where they were in a bit of a recovery mode, which we are encouraged by. Most aren't there, although we see a number of you all feel you're reasonably stable, which is good. And now we're starting to see a number of companies think about reinvention. How do we have an even higher proportion of companies that become purpose-driven? Higher proportion of companies that are really conscious capital as we move forward. And it's our sense that this move, as we say, not letting a serious waste go to waste, a serious crisis go to waste, can actually really accelerate that path. As it did, frankly, in the late in the 1920s, after the pandemic of 1918, World War I. We saw some of that happening after World War II, but these ideas of reinventing the role of business society, something that you all at Conscious Capital have led the way on, and we at CCP are trying to do with big companies as well. Next. And this is something, by the way, we're seeing even more today, but it's been around for a while. Richard Edelman, who's on our board with the Edelman Trust Barometer, a global survey of citizens, when they think about serving stakeholders, they don't put investors at the top of the list. It's about employees, it's about customers, communities, shareholders are still important. And also these citizens, 3 out of 4 around the world, and by the way, it's tough to get 3 out of 4 people to grant anything these days, but 73% say a company can make a profit and also have a positive force in the world. This is what Conscious Capital has stood for. It's what we're talking about in CCP. The stakes, the expectations of citizens have risen. And by the way, out of COVID, they're rising even higher. Interesting data point. Number one way that employees get their information, their most trusted source, it isn't the media, it isn't government, it's you, their employers. And in 8 out of 10 countries surveyed around the globe, and particularly in the US, they believe that business is actually doing more to address the COVID challenges than government. So this is an opportunity for all of us as capitalists, as conscious capitalists, stakeholder capitalists, to really lift our game because the world expects us to do so. Next slide. And you can also see, if you are interested in investors, and many of our publicly traded companies are, that they're also looking for those long-term insights. How are companies run and operating for the long term? There'll be bumps and bruises along the way, but most of these investors, where most money is, this is in retirement funds, it's pension funds, it's education funds. It's not trading in the ups and downs of the market. It's investing, why investing was made. You invest now for a return down the road, and you can see how important this is. Next slide. Each year at CECP, we bring together CEOs to talk about the role of business in society. It's been an event that's been ranked along with Davos, the World Economic Forum. We think it's a lot better, a lot fewer billionaires telling millionaires what the working class feels. But we do bring CEOs together of leading companies to talk about the role of business society. Here was a panel we had. This was Richard Edelman, Edelman Trust Barometer. The far right was the head of the New York Stock Exchange. McKinsey, Dominic Barton, CEO at the time, and Ann Stossbaugh. And you can see her quote to the right was the head of CalPERS, biggest pension fund in the US. And she talked to the audience of CEOs, most of whom were white males. Had a great line. I think I own a piece of all of you, and you're too short-term oriented. Now, what we found interesting is whereas companies talk about stakeholders, because that's who they sell to or buy from or work with in their communities, that for investors, they don't think that much. They're thinking about the individual company they're investing in, but they're thinking about time frame, right? So if you're a trader, you think about day-to-day trading. We kind of aren't as worried about them. We're thinking about a pension fund. As Ann said, 30-year time horizon at CalPERS, which is the California pension. 30-year time horizon, getting people ready for retirement. The ups and downs of today's market, that's irrelevant. In fact, it's inefficient. It's about how we're building business for the future. Once you think longer term, even if you care only about financials, things like how you treat your employees, how you work with your customers, how you deal with your suppliers and your communities, Those really matter. And that's why we have, next slide. And out of this, launched what we call our CEO Investor Forum, a chance to get CEOs of the world's leading companies and investors together to talk about sustainable business. Not how the quarter is going, but how the next 3, 5, 10 years are going, and how companies are dealing with their key stakeholders. So far, this new platform, first in the world to do it. We've had some 40 companies share their long-term plans in public. Everything we do is FD compliant. You can find it online at cecp.co, what people have said in their various businesses. Take a look at how they have talked about their companies, their long-term plans. These are CEOs getting up on the stage and telling people. We'll have in the room, we average about 25 trillion of assets under management listening in on the plans. We also have a growing online audience, and I think our online audience will soon become much bigger than the on-site audience. But we'll have those representing companies. Perspective, the New York stock market's around 25 trillion. All right, so these are big investors thinking about it. Our online audience is growing, and we've had about $2 trillion of market cap of presenting companies share their plans. Many actually out of the healthcare industry who are doing some amazing things now as we come from a standing start to deal with COVID. But that's the platform we've created. Next slide. And what we do on that is we have a framework of sharing the long-term sustainable business plan framework that we've gone through. I won't go through all the details, but it's different than looking backward, which is the way most financial information is shared, and business plans, which is looking backward, kind of the equivalent of driving a car through the rearview mirror. We want companies to look forward. We know those numbers aren't guaranteed. The world's going to change, but where are you headed? What's your intent? And then once you've set that goals, we want to see how much progress you're making on it. Next page. We go through companies a 6-step process of listening and of engaging, drafting, companies helping them through that process. They then present it to key audiences. We provide feedback confidentially, and then we really, good luck, guys. We really help you deliver. You guys got to deliver those things. But we really want to have this as an integrated plan. It is one that's fairly concise. I'm going to go through what's in it in a bit that may be of ideas. And it also helps people get really corporate and internal alignment because they've now gone public with that they can really provide metrics and measures of where they're headed in their future plans. Next slide. And this is what we talk about the framework for a sustainable business plan. Its idea is to set the context and own the narrative and lead for the future. And even if you're not a publicly traded company, which I believe most of you are not, we think the framework of the topics we're talking about, which is on the right side, are valuable for a company as you talk about your stakeholders, which goes beyond the two-dimensional spreadsheet that most businesses look at, but really gets at the essence. That's still important. But what are the things beyond it? And as you can see in the upper left-hand corner, corporate purpose, top of the list. What is the purpose? Why are you here as an entity enterprise? What good are you going to do to society? Trends. What are the macro trends you're wrestling and dealing with? What is your competitive strategic positioning? Why you instead of other players? What's your special sauce as an enterprise? Human capital, critical thing that more and more of these long-term investors are thinking about. And especially today, we're just on with some investor groups right now, and they really, what are companies doing on safety? What are they doing to ensure they keep and attract and retain their best employees, even in downtimes? Risks and opportunities. We really want to understand that. Several of our companies that we have presented had a pandemic plan. Most did not. And several of those have since shared them, as I mentioned earlier, with other companies. What's the corporate governance? How is it structured with your board and ownership? How are they doing things like audit and compensation, succession planning? Really important area. In fact, for many investors, the G of ESG may be the most important for many, not all. Capital allocation. If you're making money, what are you doing with it? Is it buying back shares, which we just put a paper out on, and then asking for money from the government? Is it being invested in the future? Is it being invested in R&D? Are you buying new companies? But what are you thinking about from your capital allocation? Certainly financial performance is important. And then how are you using all these things to create long-term value, right? Long-term value for your business, for your stakeholders, and we believe that will ultimately correspond with value for the world as well. So that's the framework. We'll talk about more of that in the questions. Let's go to the last page here. And then we have our research. So our research is all available for you at ccp.co if you want to look at it. It's about why you should do a plan. And one of the biggest reasons we found, which I think is relevant to y'all, internal alignment. Here's our plan, guys. 20 pages. That's what it takes. 20 pages, very visual, very visible. Why are we in business? How do we, this is one of the key questions. Also gets companies to really communicate a long-term plan. I had one company I knew the CEO of called up and he said, geez, I have my plan. I have a strategic plan. It's great. So great. What are you going to share? He said, it's 803 pages. So it's going to be a long to-do in about a 20, 30-minute presentation. Let's see if we can tighten it up. So the goal here is not to give away your secrets and everything you're ever doing, but what is the essence of what your company is about? The purpose, the macro trends, your broad strategies, capital allocation, and the rest. And that's what's included in the what. So we have those lists that you saw earlier. The when, it is our belief, and this will build on the Business Roundtable statement last year, is that every listed company, or frankly, every company with public debt, and others are certainly welcome, should have a long-term plan using our framework or the version that of, and that should be updated annually. So you don't have to redo it all. You might say everything's the same, or geez, we weren't counting on this COVID thing. That's going to change things. We want to get a sense of where you're headed. What are you doing today to get you ready for the future to realize your purpose? The how, we went through the ways to go through that 6-step process, and then the value. And what we've seen in companies reported back, the value to them as an enterprise, as well as the value to them and investors, companies that do a better job on this, we see they outperform over time in the marketplace as well, and with their key stakeholders. So that's a little bit of summary of that. Next page, I think we're going to open up some questions. I want to give you a little bit of that, some comments and questions. With that, we're going to have another poll question that's coming out. And then please get your questions ready. And we have about 15, 20 minutes to answer as many of those as we can get to. So please get your answers in there. We're looking at the next 12 to 18 months. We're seeing some optimism. Moving up. All right. So we have about 72% of precincts in right now. We've got 70% optimistic. Tell it's a business crowd. Neutral on 10%, somewhat pessimistic 16%, but overall I'm getting a sense here of generally positive, somewhat optimistic area. This is going to be as we think about a reinvention. So some smaller businesses we think may have tremendous opportunities. Tom Friedman, New York Times, had a great article yesterday on leadership. He also has a great article on the number of incredibly powerful, disruptive businesses that were launched in 2007, 2008 in the last downturn. So this often represents a real opportunity for those up and coming businesses to outperform and over deliver. All right. I think we have enough votes in. I think we have a pretty good sense of that. And we'll try to end this to get any questions that people might have.
Great. Thank you so much, Daryl, for that awesome presentation and for giving us some really good context and examples to bring us into the Q&A with the community. So we do have a number of questions up here, and let's try to get through as many as we can. I think the first one I want to go to is from more of a global perspective, particularly from the experience you have and your network. Willie is saying that Europe and Asia are always looking at company strategy more often than not in a 5 to 10 year horizon, where the US tends to look more in a 5 to 12 month horizon. And so he's curious if you think that might be shifting or implications.
Yeah, and I think it's a great question. And we do see that. The US tends to be much more short-term oriented. I once did a JV deal in Japan, and we're in the midst of the deal, and we wanted to do a long-term deal. And the Japanese partner said, we want to do a short-term deal. And we were ready to end it. I said, well, when you say short-term, what do you mean? So, well, short-term, 5 to 10 years. So we meant long-term, 3 to 5. Let's do it for 5. So we do have different proposals on that. We're really encouraging that companies take a longer-term time frame as we go forward. We're seeing that companies that have a longer-term time frame outperform over long-term, and that's key. Now, it's not an either-or, though. You need to deliver in the short term to have the results, to get momentum and all those things. But we think that longer time frame. For the plans, we let companies pick, because we actually think that's a great sign of how they're thinking about businesses. We've had some in the fashion industry be as short as 2 to 3 years, which seems a little short. Some are, I would say the average is around 5 years. We have companies in utilities that are out 10 and 20 years. So it's going to vary quite a bit. We have had several European companies, Paul Pullman at Unilever, Mark Schneider from Nestle, Emma Walmsley from GSK, all flew over to present the plans. They had never done that, even though Europe in many ways is ahead and some of the questions hadn't been one they were asked. They said, wow, this is very cool. The thing we ask people to do is think about their capital cycle. If you want an answer, otherwise we'll say 3 to 5 years. But if your capital cycle is 10 or 15 years, then you might think about a longer term time horizon than somebody who might have a shorter term capital horizon.
Yeah, that makes a lot of sense considering the capital. And I always find it so interesting what a powerful question can do, even when you're focused on things like this, if you ask a question in a certain way. So that's really interesting to hear that insight. So we have another question coming in from, it's actually an anonymous attendee, so I'm not sure what their name is, but they were asking about a strategic solution that will help to activate purpose and builds engagement alongside strategy and culture. And I'm going to connect an additional question that's related to that about how you can take that and build it with engagement in your employees, so that if there is that long-term plan, how does that get driven down into every level of the company for employee engagement?
Yeah, a few things on that. I think in an ideal world, what you'd like to do is use a model of kind of listening to your team and all of their expertise to understand, what's kind of going on. And I have a model I call LEAD, L-E-A-D. The L is about listening, seeing what's going on. Our company and our people generally have a lot of the answers. They may just not be organized, or we didn't put them in one place at one time. So some might be market research, some might be people in a manufacturing facility, some may be sales, some may be finance. They have so many insights. The second is then to get them engaged in the process. So if you can get them engaged in it, it will be much easier to sell on the other side, although I'll come to an alternative to this. So how do we now get everybody engaged in this? Our third area, and we've done this by having sessions where we'll get each team and then bring them up to the senior lead team, where we'll spend a couple of days off-site and really look to get alignment. So where do we align on? What are our situation? Where are we as an enterprise? Number one, where do we want to go? What are our goals, both quantitatively and qualitatively? And then how do we get there, the strategies along the way? So getting alignment around that is really critical, but you get better alignment if you're listening and engaging ahead of time. And then the fourth part of it is we call the double D, which is A, to deliver on it. Make sure as people are there, they believe in the plan. But then the other side of the D is also develop people so we can continue to move that. So we see it as more of a cycle than a one-time effort. One effort where we had to short circuit that a bit, I just remember that, was a Krispy Kreme. Because we didn't have time to go through all that piece. We were in an emergency situation. When my CFO came up, been in the role for 2 weeks, and he said, oh, Daryl, we have a choice. Vendor has asked us to pay cash on delivery. So we can either pay him or payroll. What do you want to do? I was like, what did you get me into in this thing? And I said, well, I think paying payroll is the biggest thing. I talked to the vendor, we got him to slow down terms. I said, why would I have come if you needed to, if we needed this stuff? Which was good, all totally true, but we need to get ourselves some room. And what we developed, we actually talked about a little bit of that. We're going to go from survival we are now. We had all these lawsuits and others to stability. We need to get our systems in place to sustain growth, which ultimately happened. And we develop the strategy, which I think almost everybody would know, which we just called Crispy, which was the letters K, and the K stood in this case for cash, because you needed cash to get through survival, and cleaning up the mess that was there beforehand. Mm-hmm. The R was about running great donut shops. That was our core business. I started as innovation, but we quickly turned that to international, as I mentioned before, which gave us our one growth opportunity we could pursue, which worked out well. The R was about reducing cost everywhere, because we needed to save money to get through this. And I remember one administrative assistant who came up, and we had 3 facilities in one location, and she was in charge of one of their cleaning bills. And we asked everybody to see, can you come up and save your salary, which is a pretty powerful concept in his tough time to do it. She said, I'm paying this much. Everybody's paying for 3 different cleaners. What if we brought them all together? And she led that whole project, paid her salary multiple years. But it was what an incredibly powerful thing for the whole organization to see an administrative assistant really stepping up to do that. The P was about powering the organization, and the why was, why not? So, but it was something that everybody remembered. Everybody, when they would come to our town hall meetings, our quarterly meetings, they all had to bring a piece of paper that was at the top, and they had to talk about how their priorities connected to the company. So that was a way to really make it happen and embed it into the organization.
Yeah, that's great. And so many of our speakers throughout the length of the conference and in the conscious capitalism community speak about that notion of tapping into the individuals on your team and asking them to be part of that creative solution. And that's where the innovation comes from. So
that's where the
that's,
innovation comes from. Absolutely. And I was on a call yesterday. We had 14 of our CEOs from CECP together, all in a closed door 1 hour. And one of the insights that came from several of the CEOs, we had people from utilities, from manufacturing companies, from 2 of the big 4 accounting firm CEOs were there, and others, was how they basically want to be empathetic, communicate, but how do we empower our team? And so one was saying, they had a bunch of, it was an engineering driven company, big company, well known, and a lot of people had 3D printers, and they had turned them into printing PPE for local hospitals. Stuff like that. So empowering the team is just so good. Give them a general direction, let them go.
Yeah, no, it's great. Thanks for those examples. I want to turn and address more the capital markets. You talked about this a little bit, and one of the other events that was supposed to be taking place last week is our annual Mission Aligned Growth Summit. And I know you and I have talked a little bit about the intersection of conscious businesses and conscious investment. So Greg is asking, within the CECP community, do you see M&A efforts that there's a drive to find purpose-driven companies to acquire, or what are you seeing in that field right now?
Good question. Good question. I'll answer this both from CCP. I also do some private equity work. And 3 years ago, I was at a private equity conference last year, right around this time. 3 years before, they said, let's come in and let's talk about conscious things with private equity and some activists and hedge funds. And it was laughed out of the room. Nobody had any interest. That's ridiculous. That's not business. The one I was at last year in the Cayman Islands of all places, but it was fun. It was a lot of work. But that was 1/3 of the speakers were talking about what I generally call sustainable or purpose-driven business, conscious business. And 1/3 of the other speakers talked about it. So that interest is really quite high. One, I think, and companies are really seeing that. The private equity guys that I do some work with, it's now part of the cycle. And I would say almost all of the major PE guys now have somebody in a position of sustainability to review deals coming in, how they can help businesses, because the belief is it's going to become more and more important as time goes on. So I think there's really interest in that. I'm not sure all the big companies who have bought purpose-driven companies have done a great job bringing them in, because they've been very good historically about bringing them in, getting the synergies and wringing out the costs and then losing the essence of the business. The one company, and we always point to, has done a marvelous job, and this is Unilever.
Yeah.
Or Ben & Jerry's or Seventh Generation and others. They've done a wonderful job. I think others are starting to think and learn from that. It's worked so effectively for them. So it's on the radar screen. I think we're seeing much more of it from a private equity standpoint on those areas. I will say that the companies that are in that area that are of scale, the number is not as big as it could be. So as those businesses get bigger, that will really help out. And I'd say it's particularly on the environmental side. The amount of money that would go into an environment with good ideas exceeds the supply of those. Most are reasonably governed. And the social side, we got businesses that are well positioned with today's consumers, are doing pretty well.
Yeah, and on our panel last week, where we had some folks that work in those spaces, they were talking about getting phone calls from colleagues who were probably laughing, as you shared, in the similar situation a year or so ago, and are now kind of coming around and saying, considering our current environment, how they can get involved. So I think we're seeing a little bit of a tipping point there, hopefully.
Yeah, we just published a paper going out next week, which is called The Earnings Call. Is this quarterly thing which you all hear about big companies, and it's actually called ESG and the Earnings Call. And a lot of the people on it, really bright guys, they just that wasn't part of their two-dimensional model. So now it's like, we should have thought about pandemics and readiness and how your safety policies and all that. So I think this is going to really accelerate. I think digitization and sustainability will be two of the accelerants coming out of the COVID period.
Yeah. So I think this will be our last question. You had asked in the polling at the beginning about where folks were on the continuum of struggling or, prospering and how it's been impacting them. So another participant is saying, if you were in a crisis scenario right now and your business is in that survival mode, what are some techniques or approaches that might help the leadership focus on purpose and long-term strategy when there's so much that needs to get addressed in the immediate nature?
It's a terrific question. And it really is. And again, I mentioned, I was speaking with a guy who used to work for me, who's running a company, growth company, plans to really blow it out this year, and it all hit a wall. And he sent me some of the numbers. And I would say a couple of things here. And I think the piece here is it's not like you can just do one. But if you're you need to do both of these. One is you got to look at your cash situation. I mean, it just is. That's how you survive, making sure you have enough money. Are all your costs essential? how you manage those costs, you got to do it the right way. The how really matters because people will remember, but you've got to be able to get yourself, reduce your burn rate, if you will, if you're losing money, and look through that. If you've had good relationships with your creditors, that's going to really be very helpful. I may go on to a Krispy Kreme story on that, but having that there is just so important of where you are. So you need to have that. So without that, you don't have a chance. That said, if all you do is focus on that, you will just be in survival mode forever. It'll be like treading water, and you're going to drown eventually. And the number one reason a company goes bankrupt is because they went bankrupt before, right? You're stuck. So, and that's what happens is the finance guys take over, and that's all they think about. You need to plant some seeds, and the amount of seeds you can plant are directly related to how much flexibility you have and how much it's going to take so that you can actually realize your purpose, all right? And I've given the Krispy Kreme situation, this other business I was talking to today, they were working on some great products and they wanted to cut all their R&D spend because they're having a tough time. I said, no, what's going to give you your success? Well, we have the best products in the field. They have high quality. We're in a couple of categories, but we aren't in mainstream categories. That's going to be key, but we can save the money on that because it's not going to happen right away. You maybe only get one bet. Maybe get a bet and a half or two, but really having that bet. And if this group, which had a goal in their category to be the absolute best quality, best nutritional profile, vegan product, that all the nutritionals associated with it, that's the place you want to put your bet. You got to manage that cost. And some of the other areas you may have to dial back on until you're ready. So getting the organization around that can be very helpful. The Krispy Kreme scenario, we put our focus in on, the basic team. How do we run our costs so we could reduce our burn rate? And then we let, one guy try to, go around the world. We had a backup plan in innovation, but we actually found that was good. We thought it would be good in that case. It was just more capital intensive than we were ready to do. So we needed to find that, but it is that balance. If all you care about is about, here's my wonderful growth ideas, and don't worry about the cash, that'll be an issue. You got to kind of walk and chew gum. So it's, kind of math and purpose as you think about it. So that would be the thought. But glad to talk about anybody because each situation is different. But I think getting the group to rally around that, but it may not be everybody, right? It might be a small group, whereas finance and others are getting us, to get through talking to the banks, talking to the creditors, making sure we got our SBA loans, all those other kind of things. You may have a lot of focus there, but you have to be selective in some of those other areas.
Yeah, thank you. And that notion of individual contributions and flexibility, certainly part of resiliency during any time. So I think those are some great things to think about. Well, thank you so much, Daryl, for being with us and sharing your wisdom and letting us know a little bit more about CECP. I'm sure there's lots of alignment with folks here in the community. We really appreciate you being here with us.
Thanks, Amanda. Thanks to you and Alexander and everybody else. It's been an honor.
Thank you. And as a reminder, we'll be back here tomorrow at 3 o'clock. We'll have a facilitated conscious connection session that I'll be leading. If you're new to conscious capitalism, we'll be giving you an overview of the philosophy and then bringing you through a immersive interactive experience in small groups where you can take a case study from the Conscious Capitalism Network and apply what you're learning about stakeholder orientation. So it's going to be an exciting, immersive opportunity to connect with other conscious capitalists around the world. Have a good rest of your night. Stay safe and healthy, and we'll see you all back here tomorrow.